So a few points to look at. First of all, in the data released over the European session, but we'll start in Asia. An actually surprising positive number from China. So China CPI, Consumer Price Index for August, on a year-on-year basis up +2%, ahead of the forecast of +1.8%, and again ahead of the prior read of +1.6%. That might sound like it's good news, and it possibly is seen in isolation, but when you then compare what's happening in consumer prices with what's happening with factory gate prices or PMIs, Purchase Manager Index prices, that's not so good news, because the PMIs are falling sharply, have been for the best part of a couple of years or more, whilst in food inflation, which is what this really represents, seems to be getting a hold again there. So that divergence is another problem for the People's Bank of China to wrestle with, and I guess people will be keeping a close eye on that now to see exactly what happens there. And then back into Europe, French industrial output for July, a month-on-month number. This again, something of a disappointment, -0.8%, so actually negative. That compared to the forecast of a +0.2% read, and the prior -0.1% read. So another troubling number for the French economy, and they do seem to be coming rather thick and fast at the moment.
Right, so that's sort of everywhere really. That's sort of coming through in lots of other countries as well.
Indeed, but you know, we flagged France because it's the second largest economy within the Eurozone, and you know, if the whole Eurozone is going to turn around once and for all, then you'll need to see France coming to the party. Quick hop over the channel to the UK, Halifax House Price Index for August. Again, we look at the month-on-month number, +2.7%, way ahead of the forecast, +0.5%, and even further ahead of the prior read of -0.4%. Interesting to note that the year-on-year data shows a +9% rise in UK house prices. What we don't know from that headline number, of course, is what the regional breakdown is. Nonetheless, it's an intriguing figure, and one which presumably, even though it might not directly form part of the decision-making process, will be in the minds of the Bank of England's Monetary Policy Committee. At midday, we had the interest rate decision from that group of gentlemen and ladies. No change is the verdict. Voting amongst the 9 members was 8-1 in favour of no change on rates, just the one dissenter, and 9-0 on no change or any need to reenact QE. So as we were, I've read several reports this week that suggest that Q2 2016 is being sort of picked out by analysts as an area where we might see a rate rise. We'll see if the voting changes, you know, next month. One dissenter could presumably become 2 or 3.
I suppose it's not like the old days where an overheating housing market was greeted with an interest rate rise.
No, not at the moment, because of course it's, you know, the house prices are only, you know, one component of the inflationary picture here in the UK, and it's probably the sole thing that's actually rising at any kind of dramatic rate.